Hey everyone, Bob Kendall here. Just want to let you know before we get into tonight's video that we're very close to releasing all of our indicators. On this screen that you're seeing right now is something called the WaveTech Webs. Those have not been released. We use them in the live trading room all the time. I'm going to be introducing those to the community. You see the PPMs down below, and there are 4 other indicators that are going to be coming out. Fibonacci projections as well as cycles, some other indicators that will be used. If you want to find out how to get them, you can do 2 things. You can go to kendallreport.com, give us your email, tell us that you're interested in these indicators, or you can go in to TradingView and follow me there, Kendall Report, all one word. Thanks everyone. Welcome everyone to the Kendall Report. I'm Bob Kendall. It is Tuesday night and we had quite the session yesterday. We saw the so-called Russian pullback, which not sure that happened, but the market sure reacted to it. I think I underestimated the real influence, at least from the algos being able to react to this news. We saw the S&P up 1.6, NASDAQ up 2.5%, and the Russell up 2.8. In last night's video, I discussed something I thought was interesting, is that we're at this pivot point where we're going to get 2 days, 3 days up after having a 3-day finishing their pattern. Well, we saw this big event yesterday, and I think it's possible that it was a one-day wonder, meaning that we may have already completed the pattern. There's some elements that I'll talk about in the technicals tonight that will reveal some of those thoughts and what I think is likely to happen as we go forward over the next several days. It's amazing that the Ukraine news, or that pickup by the algorithms, was bigger than the PPI coming in at a plus 1%, 9.7% year over year. They revised the previous month just like they did in CPI. And we've got this huge inflationary situation going. So they're pulling the same line as they did last time. So these are all the bots and everything out there driving the narrative, right? So now this is peak, I'll do air quotes, peak inflation. They tried that a few months ago, if you remember. It was peak inflation then. It was transitory. And it's peak when it was at 7.5. Now it's peak at 10%. And this is producer price indexes that came in today. So there's a lagging effect. This is going to bleed into the CPI. This is not over yet. We see Bullard and other folks talking about getting into a 1% increase in yields before July. Listen, I think the Fed's in big trouble here, and there's nothing they're going to be able to do. That every day that they wait is inflation getting more embedded into the economy. We're just seeing way too many elements start to flow and get sticky here, and this is really dangerous. A lot of folks have talked about stagflation, all of that stuff, and the markets reacted amazingly. Like I said, we're up big numbers yesterday, but was that real? It's interesting because I'm going to show you in the technicals in a minute that the PPMs are really in a dangerous position all of a sudden. We did see some pullback and otherwise buying in our database to come in, but nothing material again. We're just seeing the markets rotate all around. So my basic dialogue here from the standpoint of what we're likely to see going forward is just more of this noise, which perpetuates going back, I think it was 2 weeks ago now when I did the video about being stuck in this trading range. This is the kind of rhetoric, this is the type of environment that we end up in that keeps that trading range going. If you remember, in January, we had a range of, on the basis of the S&P, 48.18 to 42.22. My premise is that we're going to stay locked in these ranges and just waffle around almost randomly. And it sure looks like that's what's setting up so far. And I think this will last for several months. We'll see what plays out here as we go forward. We're I think, about 2.5 weeks or so from a Fed meeting. They need to step in tomorrow and just say, hey, folks, we're stopping any purchasing of treasuries and mortgages and all that stuff. They need to do that tomorrow, like at 3:59 on Wednesday. They need to announce they're done. There's no reason for this. It's amazing. They're so afraid to freak out the markets. This all started with Helicopter Ben, and this is worse with this regime that we have right now. Well, the other thing that's interesting, we get this massive inflation. 10-year doesn't really react much at all. Just nothing out there that seems to be responding to the real news or the material news versus, we'll call it, the conjured up news of the invasion by Russia. Maybe they will. But all of a sudden they pull back troops and Biden comes out and says that there's still troops on the border. So who's right, who's wrong, what story is real? We're seeing the futures under a little bit of pressure overnight, but nothing really material as well. So let's go ahead and take a look at the database. So database is up to 30.28. We were around 26%. We did see 1,144 buy signals, 112 sells. So we had a positive bullish rotation, but you folks know the number if you've been around this channel. You got to be over 42% on this database. We've got 4,929 symbols long right now. It's just not enough traction there to make any real difference from that standpoint. I just can't emphasize enough of what in a nowhere's land in the middle of this trading range that we really are in. Every metric that I watch, everything that I see through our database and everything is just confirming that we're likely to be locked into this database configuration that we're in, somewhere between 22% bullish to under 40% and just locked there, just churning here. So there's going to be some short-term buy signals and sell signals in here, but for the most part, it's just a churn and we're not really getting anything material at all. Let's go ahead and take a look at some of the numbers out there from the standpoint of what's going on with the futures here. We're down 10 handles right now on the S&P futures. We're at 44.54. If you were watching the last hour of action yesterday, it was absolutely amazing, especially coming into the last 15 minutes. We just saw this huge move from 44 all the way into a new high, print a new high, and then we came back 20-some handles off the highs that we printed. It was just this big, massive volatility spike, and it was absolute air pockets. Very little was trading in this range. There was a lot of illiquidity that showed up in the markets during this time. So there were some orders to buy and a close. They turned to sells and then back to buys. It was absolutely amazing, just the volatility. And when you get into that type of action, typically what that means is we're just seeing the markets, like I said, in this churn mode. So let's take a look at what happened yesterday from the standpoint of the configuration of the markets. Now, one of the things that still exists out there is the 21-day moving average is at 44.61. Let me bring that up on screen here. We're 44.56 now. It was 61 yesterday. What we're looking at is this downward slope, but look at PPM1. It is absolutely looked like it was upticking. It is completely reversed back down. It is in a full-blown downtrend mode, 0.27, minus 0.27. That number is at right now 44.74. We just look at the potential ranges for tomorrow. R1 is 44.87, just looking at the daily. S1, 44.41. I think there's a possibility of at least trading up to R1, 44.87. We could see that would be a new high from yesterday, but I'm looking for a failure possibility of trading to 44.41, S1, S2, 44.16. And ultimately, if that happens, we're going to see all of these PPMs roll over here. And this is a very negative configuration. There is still the possibility, as I mentioned, that we get the 3 days up. That would mean that we would have an update today, and we would have an update on Thursday, and then we would see a reversal as we come into the end of the week. But right now, the next things that we have coming is not going to be until Thursday. There's some big earnings coming out. There's also some of the claims and other elements coming out. But the big news today was the PPI, and I can't imagine that this isn't on everyone's mind as we go forward here. This is just too impactful to ignore a basically 10% year-over-year number. Next market we'll go to is the NASDAQ. NASDAQ's down 40 handles right now. Also, right on all these configurations on these indexes are very similar. Same thing, the PPMs are very similar in formation. The PPM2 is trying to turn up here, which tells us that we might attempt to go up toward an R1, R2 today. That's 14,715, 14,833. That's a possibility. But on the downside, if we can't get above 14,715, 14,504, we're almost trading down toward there right now. 14,386 would be the next level. And depending on how we finish today on all of these indexes, especially the S&P and the NASDAQ, this will set the tone as we come into Thursday, whether we're just going to see a failure, resumption of the downtrend, and a retest of the lows that we printed on Monday. We'll see how the configuration comes in. There's still about a 60% probability to get the extra 2 days up on these indexes. We'll see how that flows, but that is the range I'm looking for. R1, S1 min, or R1, S2 would be the extreme for the session. You may recall I've been talking about how is it possible that the Russell could be the market that saves everything, right? All of a sudden, the small caps are coming into play, and what we're seeing here is it trading right into the RXT number 2074. We had a high of 2078. We are actually closed at 2076. Came very close getting to an RXT sell signal. Overnight right now, RTY is down about 1/3%, down about right now about 6 handles. Nothing real big, but we are looking at this pattern is setting up the potential to go up to these Fibonacci projections that are up here, which are suggesting 2150 to 2193. So this will be an interesting pattern to watch. I think this is very constructive from the standpoint of this formation, and it just may be that these small caps are going to be the market that holds this together and keeps us in this trading range and keeps a positive bias as we go forward. The next market we'll look at is the treasuries. Treasuries continued to print up. Like I said, they didn't have a big reaction. We're at 204. We got that RXT sell signal a couple sessions ago on 210. We did see that. We've had 1 day sideways. We're basically still trading about that same range. The PPMs are still in a positive mode. We got a 1.28, 0.70, and 0.90 on PPM 1, 2, and 3. So these are very positive trends to the upside. We do have some Fibonacci projections for the market to move up to, the interest rates move to 212 to 214 is the near-term target here. So there's still plenty of upside. Markets don't seem to be worried about this upside, including we don't really see the yields actually responding to this inflation. Now, one of the positive things that happened yesterday, I talk about this spread every day, is we did get an uptick. We're back to 0.42 S2. We were down to 0.36 the other day. So this is a positive sign from the standpoint of what's going on with the yield curve. And this is probably the primary thing I think a lot of folks were looking at yesterday. Next market that I'll look at here is the crude oil. Crude oil flattened out quite a bit. I think with the so-called tensions in the Ukraine falling back, that's what pulled it back. I've been talking about for the last couple of days. I thought that crude oil would come back toward this 10-period moving average. That's where we ended up. 91.55 was the 10-period moving average. We've seen the momentum just flatten off substantially. I think we could see as low as 89, possibility of getting down into the mid 88 level here and just see some softness in the oil as we go forward. As we look at the weekly chart, still expecting to stay within the range. 89.76 is S2, R2 96.44. So far, we had a 95.82, so we're trading in that R2, S2 range. I think we'll continue to maintain that. We are seeing momentum fall off just a little bit, but it's very robust, and major support exists between 86 and 88 on crude oil. Next market I'll cover is gold. Gold did it once again. We saw a big sell-off yesterday. This is the weekly chart. So we did see a print up as high this week to the 1881. We're back at 1854. Only number I care about right now is staying above 1856. So we're trying to claw back to that number. PPMs are still reasonable here on the weekly. Going to the daily chart, you'll see the reversal down, and we've got support now at 1835. That's coming up about $4 per day. Like I said, for me, 1856 is key. PPMs have stalled a little bit, but we still are in trend mode on PPM 1 at 0.24. So look for that support level at 1835 to hold. The final market that I'll cover tonight is Bitcoin. Bitcoin's playing along with the game. It's a risk-on asset. As we know, we're seeing the move up toward the upper end of the ranges here as we're looking at 44,744 right now. We're looking at the grid. 44,804 is R3, so we're trading up toward R3. Acceleration across the board now in the PPMs. PPM 2 is now at a 0.91. Everything's turning up. Ultimately, it looks like the 200-day moving average will be challenged 47,200. So expect to see this market continue to have an underlying bid with major support now at 43,000. Looking at the weekly, very similar numbers. The 40-week moving average 45,700. Above that, then we have the next level would be between 47 number that I just mentioned, 47,000 and 50,546. PPMs are still negative, so there is a slight negative influence, and what my expectation is that we stay probably between the 10 and the 21, which is 43,000 to 50,000. So look at 43,000 as key support in this market. Well, folks, this is going to do the video for tonight. I really appreciate everything. Those of you that are in the live room, remember we're starting at noon Eastern time tomorrow. I will see you all there. Thanks as always watching this channel. Make sure you subscribe, hit that like button and the bell so you know when I post these videos. Thanks again for watching.